stock exchanges are steeped in tradition. Of course, one of the traditions in ringing a bell is to signify that start and end of trading hours. Now, the tradition started with the New York Stock Exchange and has been adopted by more exchanges around the world. The iconic bell ringing ceremony at the NASDAQ market represents an enormous opportunity to showcase your company and celebrate its achievements and milestones before a global audience. The opening and closing bell is not only a sign of opening and closing a trading day or symbolic gesture, it also gives the podium to companies to make an announcement about their new products in the front of a huge audience. It is considered as an honor to ring the opening bell. Today, United States Chamber of Commerce has given President Bola Tinubu the honor to ring the closing bell of the National Association of Securities Dealers Automated Quotations, NASDAQ. Let's see what this means for the global market. And first, to understand this, I have joining me an investment and financial advisor, Mr. Gbenga Ogurinola from the United Kingdom. Thank you so much, Mr. Ogurinola. It's good to see you today.
Thank you, Tolu. It's nice to be here again today.
I'd like to start with your assessment of the stock market's performance. That's Nigeria's market for some time. We should also touch on the global space. What's been playing out in recent times for the first half of the year?
Yeah, so the first half of the year saw some level of stability generally in the global market. Towards the end of the third quarter, we are gradually approaching the end of the third quarter. We see some realignment again in the markets, particularly most of the markets in the developed world, particularly the markets in America and in Europe, saw some decline in the third quarter. One can attribute that to the summer holiday and some realignments in the markets generally, because during this period, you see investors trying to realign and reassess their investments. So one can attribute that to those realignments and the summer holiday. But generally, we'll say that it's been a good year thus far for the global capital market, and all things being equal, I think it should be sustained even towards the end of the year.
It's looking like the global challenges, war in Ukraine and all that has been happening, seems not to be changing the face of the market. Is the market isolated from all of these issues?
No, the market isn't. What we've just seen is some form of resilience. I mean, this thing has been going on for over a year now. And what plays in the market is that once they see some level of stability and things are probably predictable, people are able to walk around situations and preempt what will happen next. So since what has been happening is not out of the ordinary, it's not escalated beyond what it has been in the last couple of months, the market is becoming used to it and trying to walk around the current situation. So, but when we do see some level of escalations or development, then it's going to hit the market again. But because it's been on the same level for a while, we've seen some level of stability generally in the market.
Index in Nigeria, back again home, surpassed its best since like 2008. What fundamentals, in your thoughts, would you assign for this performance?
So what we actually experienced initially was the technical devaluation of the naira, and of course the market also responded by some level of appreciation. But after that, what we've seen is the market still tending to move upward, especially the very high capitalized stocks. We're also seeing movement in the oil stocks, because of the removal of fuel subsidy. That has also kind of created a lot of activities and it has boosted the oil sector also. So we see generally this market or the securities responding to the various intricacies involved in that is at play, within their various sectors, the oil sector, also the level of appreciation that we have seen can also be traceable to the devaluation of the naira technically. But the market has also been resilient in the sense that the various companies that are quoted in the market have been doing well reasonably. They've been expanding despite all the various situations that have been unfavorable in the country. It's been a good year generally for most of these stocks. And since they are profitable, investors can only but invest more and see value in them. And so we'll continue to see this happen unless there's a shock that would kind of remove that. And people are also looking for a way to invest to beat inflation. And the capital market is one of those viable ways to beat inflation.
Let's move on now to see what we expect today. The President of the Federal Republic of Nigeria is expected to ring the closing bell. Many believe that this is a step in the right direction. Looks good for Nigeria, selling our brand that far.
Yes, yeah, that's true. It's a good step in the right direction. It's also a form of recognition of the current government and some of the steps that they've been taking economically to ensure that Nigeria sits among the league of nations that are actually striving for economic excellence. And I believe that with that, there will be more attention, paid to Nigeria. And what the government just needs to do is to ensure that there is a very good enabling environment such that when the investors come in, they have all it takes to remain. And they also have all it takes to attract more people because their experience will determine if we'll get more people coming to the economy. So it's a good development. We should just prepare our own market, our own economy to ensure that we are ready for the inflow when it starts coming in.
Being ready for that inflow is also very important. Exchange rate issues for companies that want to repatriate funds and all of that. What sort of policies are you expecting to be in place to further attract investors? You talk to a lot of foreign investors at the moment, and they will put their money where they know that they will have rest and they are sure of return on investment. So what are you thinking? What should we be discussing around that table at this time?
Yeah, so I think one of the good things that the government has done is to remove the barrier where there's free entry, free exits in the foreign exchange market. That has been a very big issue in the past, whereby investors come into the market and they're unable to leave the market when they want to repatriate their funds back because of the kind of foreign exchange policies that were in place. Now, if there's a free entry, free exit policy in place, where investors can come in and move out at any time, it will encourage them to come in more. And also the government needs to ensure that there's some level of stability in its policies, because you cannot continue to change policies. And that, of course, will send wrong signals to the foreign investors because they can't bank on you, they can't rely, they can't plan even with that kind of a situation. So you need to have a form of stability in your policy. You need to also ensure that there's a free entry, free exit. That in itself would attract more foreign investors to come into the market.
The market remains very, very important at this time. But when you look at it and see what foreign firms are going through at a particular time in Nigeria, the domestic investors were doing pretty better. They were able to hold on and sustain the market at that particular time. We talk of FPIs, we talk of FDIs, and some will tell you that, yes, we want more of FDIs, foreign direct investments, than portfolio guys that will bring all of this money and want to just make profit and leave the market. Which do you think we should stress, or which do you think which do we need at this time to help save our naira, to help show up more FX at this time?
We need the combination of the two, really, because that will give us a robust market where no certain set of people can actually dictate the pace of the market, and won't put the market into jeopardy. So if we have enough foreign investors, we have local players all in the market, that deepens the market, that makes the market more attractive. It also helps to keep the level of liquidity in balance. So we are not at a certain point, having so much people dumping stocks in the market, while at a certain time you have people demanding for securities and there's none to supply. So we need that balance whereby we'll be able to have enough foreign investments. We also have reasonable local players in the market. That's what has been going well for some of these developed markets. And that is why we see in some markets the level of volatility is not so high, because there's a balance in the market. And that's what we also need in our markets. We need a balance where we have enough local players, we have enough foreign investment in the market. We also need a market that is that is responsive. So if you look at our market for some time now, we've not been raising funds in the market, and that's because a lot of people are frightened about raising funds. The market hasn't been playing that role. We need the market to go back to that role whereby the companies that want to expand can easily raise funds in equities rather than going for debt capital in those regards. So we need everybody in the market. That would deepen the market. That will give confidence in the market, and that will keep the market, active and attractive to everybody.
Mm. Moving on, let's talk about the currency market and see what's been playing out with regards to the US dollar against other currencies. The greenback has always had that strength. Even what is happening in Nigeria, despite the opening up of the FX market, we see the dollar trading at over 900 naira. It's been like that for some weeks, and that's not really looking good for manufacturers and others that need this FX to be able to bring in goods and services. So what are you thinking about the currency market, particularly as it affects Nigeria?
Yeah, so I think there's a new team in the CBN currently, and I want to believe that the new team would saddle themselves with that responsibility of really bringing about some level of naira, strength in the market. The naira has been bashed so much, and we need a situation where the naira will begin to rise again, against major currencies. And this in itself will also boost the economy generally. So I believe that the people that have just been appointed into the various positions, one of the new CBN deputy governor is actually an old classmate in the university. So I believe that, and he was a very brilliant chap while we were in school, and I believe that these are people that have what it takes, to change the face of the economy. So I believe that they will give themselves that responsibility of really seeing what we can do to bring the naira up in terms of value. But just speaking on the side, I would say that one of the things we can do is to actually, I've said that several times, is to begin to see what we can produce as a nation. We need to start changing from a consuming nation to a producing nation. And we'll begin to see the naira, without even, with little or no effort, coming up again. But there are also certain policies that can be put in place, in terms of trade, in terms of what we prioritize, in terms of even what we regard as priorities economically, that would help the naira to begin to move up. Also, we have, there are news about Dangote refineries also coming up on stream very shortly. That would also help in terms of the foreign exchange policies of the government, whereby, they've spent so much money on importing fuel over the years. I think that will also change, and that can bring some level of relief to the to the government, to the populace generally. We also have it that by the time the refineries begin to operate, since it's a joint venture between Dangote Refinery and the NNPC, they'll be able to use some of the proceeds of the forex to bring some level of stability in the economy and also shore up the naira.
Interesting conversation right there with you. I must say that I must thank you for your time, bringing insights into all of these issues and expectations with regards to the market. A lot is playing out. We'll keep a tab on all of these developments and have you in to analyze for us. Investment and financial advisor, Mr. Gbenga Ogurinola from the United Kingdom. Do have a profitable day. Thank you so much for your time.
Thank you, Tolu. It's always a pleasure.